Hello and welcome to the paid weekly recap for the week ending October 24th, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, CEO and founder of Yellow Tunnel, and the creator of the artificial intelligence used in the predictive AI for dynamic market system. Before we get started, our normal disclosures: options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and/or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. If you need more time with the disclosures, please go ahead and pause the video here. Otherwise, we'll get into the recap for this past week. So the big story on the 10-year yield is that it's a little bit lower. Overall, there were concerns that the 10-year yield could fall further below the April 4th low of 3.9. It was like 3.88. Ultimately, the market in the 10-year yield bounced back slightly, stabilizing around that 4% level that had been support previously. So right now, we didn't make a new low. The economic concerns don't seem to be fully there for a major recession that may drive the interest rate market lower. And the market on the whole consolidated until Friday. Now, this consolidation is amid this question mark of what's going to happen with US-China trade negotiations. It seems like on Sunday, we've got some updates on the positive side. So that may be going the right direction. At the same time, we've got some increased tension with Canada. But the main driver of that action on Friday was cooler than expected inflation data out of the CPI. So with inflation numbers coming in lower than expected in spite of tariffs and trade wars and all of this other stuff that has been a cause for concern for inflation, investors gain confidence that the market can go higher and that the Fed can lower interest rates and that things can be good. The last thing the market wants to see is a concern about the economy along with inflation, because then the Fed can't necessarily lower interest rates because inflation may be too high. So the fact that that number comes in low allows the Fed to continue to lower interest rates to help spur boost in the economy. And that generally was taken very well on Friday for that breakout to new highs for the broad market. Now, just a few weeks ago, when we started talking about the concerns with the China trade situation, the market tested the 50-day moving average. That's our major support. We are now 23 points above that in SPY. So the market right now has a bit of room before major support. There is going to be some light support at the previous high, major support at this recent low, and now no real major resistance other than big numbers as we drive towards big option open interest at, say, the 700 level. All in all, the market looks bullish right now. And tech also following same suit. Tested just above the 50-day moving average, didn't quite get down to it, but again, that major support is at that October 10th low. We've broken out to new highs, minor support at the previous high, with a look now for the market. If we get bullish earnings with major tech companies coming out this week, we may be looking for a target of 650. That would be a next big round number, a target zone for option open interest. So broadly speaking, right now, both S&P and tech look very bullish, and the market looks like it's ready to continue to the upside. Looking ahead towards earnings, as well as continued progress with China and the United States and their trade conversations, and of course, the US government shutdown. Now, small caps didn't quite make a new high, but small caps have been drifting higher as well, consolidating recently. Highs were made just a few days after the China trade issues on October 10th. So no real surprise that we didn't quite make a new high, but at the end of the day, again, looks bullish, has some near-term resistance, near price action resistance on this mid-October high. But 260 looks like it's in the realm of reasonable possibility here. And a lot of the financial companies, which is a large portion of small caps, have already announced, and industrials, a lot of those coming out this week. So we've got some good progress right now for the market, broadly looking very bullish. Now, paired with that, we've got the VIX dropping to 16. Ultimately, get some of this other fundamental news behind us, and I could see this VIX dropping to 14 or even lower, especially with the market at highs. It is not particularly elevated here, knowing that we've got some uncertainty still. US-China trade negotiations, government shutdown, earnings, these all normally put a bit more premium into the market. So seeing that nice bump up on Friday and lower leverage does set up well for paid trade ideas. Now, last week we didn't have them. We didn't have that predictability of a low inflation number. But now that the market's made a new high, markets start to look a bit more predictable, look a little bit more reasonable. And with the VIX low, which we didn't have a week ago, we've got leverage and defined risk that are very cheap. So that suits well for a long call position. And that's what we'll be looking into this week. So we've got a few trade ideas that looked like they should be lining up on Tuesday. We had one that looked like it was going to line up this past week, but market conditions actually unwound that due to some of the other fundamental inputs. So we didn't have any ideas this week. That's not a bad thing, staying in cash when things are uncertain. Now we've got some more certainty, and along with that, more confidence and the AI predictability that takes a look at a lot of the technicals, lines up really well for some of those bullish opportunities. So excited about the opportunities this week, as well as the opportunities that we've been discussing in the live trading room. Now, these are not as always as I guess structurally set by the same structure as paid. We talk about a lot of ideas like put credit spreads or earnings trades. Some of these are AI driven. Some of them are just about some of the data behind how much earnings tends to impact the stock. We're also happy to talk through any ideas that you guys are looking at. If you want to join us in the live trading room, the morning bell goes from 9:15 to 10:15, 10:30 Eastern, closing bell from 3 to 4. Feel free to pop in, ask any question of Vlad or myself. We can talk through option structures, how we look at the trades, so that you understand how professional traders and artificial intelligence are visioning the next potential move in trade and how we could look at ways to structure a trade with the highest probability of success, highest potential return on capital, expected value being maximized. And that is ultimately our goal, is to try to maximize expected value and find those good, positive expected value trade setups. As always, if you have questions, you can always reach out to me. I'm Keith at yellowtunnel.com, or Vlad is Vlad at yellowtunnel.com. Looking forward to another great week for this market. Looking forward to a bit more, maybe excitement with earnings. And if you guys have questions, feel free to pop into that trading room or send us an email. Thanks again.